Hey, what's going on, guys? Let's talk about in terms of the ultimate guide to trend following. Before I start, just want to make sure that you guys like and subscribe to the videos. Keeps me motivated to make more video for you guys, and hopefully you guys can learn and profit from the markets. So let's start off. First thing first, what is trend following? If you try to break it down between the two words, trend is when the price moves in a single direction. It can be either on the up or down as long as it's not going sideways, right? So it's actually going one particular direction, doesn't matter which way, because as traders you can profit it in either way. And following is basically to follow. It is going to follow, so the price is going to tell us what direction is, and then we're just going to follow it. So it is reactive in nature, and it is not really there to predict the markets or price levels. Now, why will somebody do trend following? Because you really want to learn from individuals who have had success in markets, right? So somebody like Jesse Livermore, history has made more than $100 million. Richard Dennis, most commonly known as the Turtle Traders, where he set up a bunch of people and taught them his trading strategies. Then there's Ed Seykota, the most common one, which is in the book of Jack Schwager, right? Now, what isn't trend following? So trend following is not really a fixed trading system where you say, you know what, it goes up over this is a buy, if it goes over this is a low. It's more of a set of guiding principles that is going to help you follow a trading system. So you can have two traders who are really trying to have a trend following approach, but in terms of the entries and exits, it's going to be completely different, right? So it's not a trading system. It's more of a guideline to know what you want to do with strategy. And trend following, so far as it is, it's not really a holy grail. So it's not that you can try to use it as a holy grail. Trend following is also not scalping. So you're trying to buy, trying to make 10 cents, 20 cents, dollar moves, right? You're trying to get a bigger move, the meat of the move, right? You might not be able to get the bottom of the market. That's okay. As long as it reverses and moves in direction, then that's what you want to capture. It's not intraday trading. It is not investing for years because you are trying to follow the trend. I mean, none of the stock really moves in one particular direction all the time. It's not about placing one big trade and hoping for the best. So, I mean, sometimes you might have trades where you try to trade it and you have a loss in it, right? It's not trying to predict where the markets will reverse. It's not a reversal strategy, and it's not trading with candlestick patterns. So the five principles of trend following is really buy high, sell higher, or sell low and buy lower, right? And you want to go and follow price. You want to risk a fraction of your equity and no profit targets and trade on markets. Now let's break it down into why buy high, sell higher. Right? If you look at this chart, if you look at this Micron, you'll be like, hey, you know what? This stock is really extended, went from $30 to $50, pretty gigantic move, and hey, let's go and short this market, right? Why not? But if you see, the trend is actually in the upside direction, right? You see this trend is up, and after from here, you look kind of overbought, but now it had another 50% upside move from $40 to $60, right? So that's why buy high and sell higher. On the reverse side, sell low, buy lower. So let's say if you look at this, you're like, hey, you know what? The stock has fallen so low. Now maybe you should go and short this turd. Sorry, we should. Cannot go any lower, and maybe you should go and buy it, right? Maybe it bounces, so you don't want to short it. And guess what? It just goes and drops from $80 to $20 in a heartbeat, right? So that's that. So in trend trading, we just want to follow price. It's not a reversal pattern. It's not a reversal strategy. So it feels good to know that you can call the tops and bottoms. Hey, you know what? You can get a pat on the back, but are you the last man standing? Chances are not. So whenever you start making predictions in the market, it is going to cloud your judgment, and you will start to lose your objectivity in the markets. And if this were to happen, you will be more adamant, more you would just won't go and refuse to take a loss because you just want to be right. The market might go against you, and just you want to be the guy who's just want to be fucking right, right? And you might want to try to average into losses, right? Which is you think, hey, you know what, this is coming back. I want to go and buy it lower, 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 and eventually you just dry up your account. Next, we look at in terms of risking a fraction of your equity. So sometimes you might have a trading system that wins 50% of the time, right, with a 1 to 2 risk reward. And you might have an outcome, let's say you have 4 consecutive losses and 4 consecutive wins. Now, overall, you might look like, hey, you know what, it's a profitable system. Yeah, maybe, but it depends. So if you risk 30% of your equity, right, you for the first time you risk 30%, you lose 30, you lose another 30, 60, 90, and you kind of blow up after the first 4 trades. But what if you risk only 1% of your equity? I mean, in this situation, now you can go and risk 4 times and you risk only down 4%. And then when you make 2 times the risk reward, I mean, you end up with 4%, right? So it's having a winning system without proper risk management is not really going to take you anywhere. So you have to see how much bet you want to take, what is the kind of risk reward strategy you want to apply. This is a really good chart as well. Talks about if you lose 10% of the capital, it is going to take you 11% to come back. So in this situation, really is if you lose 50% of your capital, it's going to take you 100% to actually make your money back. I mean, how often do you really make 100% return? I mean, next to never, right? Now, when you're talking about trend following, we also don't want to talk about it in terms of profit targets, right? So now let's take a moment and think what having a profit target really means. So by having a profit target, you are trying to limit your profits, right? When you're talking about trend following, where a trend lasts for months and years, you don't really want to be able to cut your winners, right? You don't want to have a profit target. So by having a fixed profit target is as good as saying, hey, you know what? I'm predicting the market is going to reverse at this point, and just like let's just get out of this exact level, and we'll see what it is. Right. So in other situations, if you saw the charts, I mean, once a stock has taken a particular direction, chances are it's institutional buyers who are or institutional sellers who are really pushing the stock either way. It's not you and me as retail traders trying to move the things around, right? So you want to go in the direction of the trend. Now, let's say if you had this Netflix stock and hey, you bought it for 120 bucks, you went up to 160, and you're like, hey, you know what, that's good enough. I mean, why not, right? I mean, you went from 120 to 160, made 40 bucks, so about 30% of your profits, and you cut your trade. I mean, look at what happened. It went from 120 all the way to 340. So, I mean, it went up 300%. I mean, yes, you made some money over here, 30%, but hey, you missed this 300% move. So that's really talking about not having a profit target and really letting the markets to decide for you. So in terms of no profit targets, some way to trail your stop losses is by using the moving average crossovers. If the price closes beyond a particular moving average, or if you're breaking up a price structure, so maybe if you're trying to go long, higher highs, higher lows, maybe it negates the higher low. There's a possibility of you to get out of the trade. Or maybe there's a trend line, right? The stock is trading in a particular direction. In this situation, if it goes in a particular direction, as long as it doesn't, so let's say you draw a line over here, right? As long as it doesn't break the trend line, you want to stay in. If it does break, then maybe you want to get out. Or you can have a number of ATR away from the peak or trough, right? So when you talk about trading, it can be applicable in all stocks, all markets, all futures, right? So you don't want to go and restrict yourself in which market it is. And as you probably heard, most of the time the market or stocks, they spend more time digesting, which is moving sideways. Right? There are times when the stock actually releases its pressure, and that's a point when it actually starts trending in a particular direction. Right? So you want to be in the name where you're actually moving either way, the upside or downside. You don't want to have a stock just trading sideways. Now, what is a trend follower's edge? So let's imagine this. Let's say there's a particular stock called XYZ and it's been trading higher over the last 6 months and increases by over 50%, right? So the stock has gone up by over 50%. Now, if it currently trades at 150 bucks and you decide to short it, I mean, hey, you know what? You can possibly make some money. But if you keep applying this approach to different markets out there, looking for small profit targets with no stop loss, eventually you will blow out, right? You might get lucky a few times, but after a series of trades, as we saw based on the risk calculator, the risk management, you will eventually blow yourself out. Now, what if I'm on the opposite side of your trade instead? I mean, if I've already determined the stock is already up 50%, chances are the stock might go another 50%, right? So I may lose a few times. The stock might actually come back and retrace and so on. But all I need is one trade to really make it all back. So, and that is very the same trade that caused you to blow up earlier, right? So now we can see what's really the edge of a trend follower. Now with discretionary trend following strategy, right? So before I continue, I just want to let you know that most traders will generally skip this part and they find out like, because they want to find out, what trading strategy is this guy talking about. But one thing I've learned through the years of trading is you cannot simply copy someone else's trading strategy, right? You will most likely fail as you do not have the conviction behind the strategy because you haven't tested it before yourself, so you can't really tell what your numbers look like. You also want to take a look in terms of risk management that we talk about. You must risk a fraction of your equity on each trade, right? Keep your losses to no more than 1% on each trade. That way you can survive longer and be profitable, hopefully. And in terms of trading strategy, right? It's pretty simple. I mean, if the 200 moving average is pointing higher and the price is above it, then it's an uptrend. I mean, it's kind of a no-brainer. If it's an uptrend, then wait for at least 2 tests at the dynamic support. So maybe you look at the 20 and 50 and you try to determine, hey, you know what? It has tested 20 and 50 moving average a couple of times. Now the uptrend is intact. If the price tests dynamic support twice, then go long on the third test. If you're long, then you want to go and place a stop loss of 2 ATR from your entry. So let's say the average true range of a stock is say $1. So maybe you, for 2 ATR, you put your stop on there. If a price goes in your favor, then you take profits when candle closes beyond the 50 moving average. Some of the couple of good guidelines to know is do not try to shift your stop loss to break even right when you are profitable. Right, so you can either get stopped out on the initial stop loss or the trading stop loss. So trade as many markets or as many stocks as possible with low correlations. Once again, risk no more than 1% of your equity on each trade, and continue trading even if the price has tested the zone many times. So the guidelines is these are not hard and fast rules. I mean, the question really is, do you want to wait for a confirmation before the entry? So maybe you want to see a reversal candlestick chart, a reversal pattern to happen, and how do you exit your trades, right? That's kind of key as well. We talked about in terms of having profit targets. You also want to determine what time frames are you trading on. Are you a daily? You want to trade on a daily basis, weekly basis, monthly basis? What your time frame really is. And you also want to determine in terms of which markets are you going to be including in your portfolio. So that's it, guys. That's an ultimate guide to trend following. Hopefully you liked the video and learned something out of it. Please like and subscribe, and have a great day.